Welcome to the Reimagine podcast. Give yourself 30 minutes and meet the people working hard to create the future of insurance today.
Hi, this is Paul Tyler, and this summer, NASA Reimagine hosted the first annual Retiretech Forum. And Laura, who came?
We had over 100 attendees representing industry decision makers, insurtechs, fintechs, and retiretech startups that joined us not only in Hartford, Connecticut, but also virtually. So it was very exciting to see the group of individuals together.
You know, it was indeed. And you organized, was it 6 panel discussions? Six, with over 25 speakers. That's right. And they took the stage at the forum and explored a number of very interesting issues, including sales and marketing, service and operations, product innovation, risk management, climate risk, and core advisor software. And today we're sharing episode number 1, session number 1, sales and marketing. We call this Starting Retirement Planning Discussions in an Increasingly Distracted World. Laura, tell us more about it.
Sure. So we had some great speakers on the panel from Surify, AmeriLife, Verisk, and Jernaya. But, you know, out of all the discussions that were had during the panel, something that really stood out to me was that we have a lot of digital tools, and we've seen since the last 2 years an increase in digital adoption. But depending on the decisions, certain individuals and consumers still want to interact with an agent, and that really stood out to me.
Yeah, really interesting. And we've heard a lot of people say you've got to meet customers where they are. But to do that requires like an incredible amount of integration with a lot of different vendors in this space. So anyway, let's roll the tape, Laura.
Thanks, Mike. Now, first panel, bring the panelists up. Great question. It's a growing market, but how do you find them? You know, it's everybody's got to buy car insurance. Everybody's got to, want if own a home, buy home insurance. How do you find people who are thinking about retirement? So, Denny Southern, who's one of our key partners at AmeriLife, runs independent distribution, is going to be the moderator. We have Barbara Ingram from Verisk, who's been a very active participant in our Hartford ecosystem and has brought a lot of energy here. Jeff Petrosky from Jernaya, and Brian, here you go. Brian Padgett from Surify, who's also was an early part of our incubator and just been doing some outstanding work. So come on up, and let me give, who gets this mic?
Yeah, awesome. Hey, Barbara.
Thank you. Well, thanks, everybody.
I got one.
I think I'm on here. Can you hear me okay? Or do I need to use my outdoor voice here? So thanks, Paul. First of all, Mike, just great to see you, sir. And being a fellow disruptor in the marketplace, I think that's a real good thing. And I think disruption could almost be a key here in terms of whether you're talking about the climate that we're in. And if you think about it, 2020, things started really with the pandemic. Where things started changing in terms of the way you reach a client, whether it's a carrier, whether it's the technology companies, whether it's an agent, however it is, the way you reach clients ultimately with product had changed. And so then last year, it's just been accelerated. We've had, my goodness, since 20, we've had war. We've had, a huge correction in the market. We've had rising interest rates. You've got political divisiveness at an all-time high. You have the regulatory environment where, you have politicians and you have career staffers, where they're very vested in different kind of things. And all these things, you can get lost in the details and you get lost in the weeds. But I think it's really important to remember the one constant through all this is the demographics don't change. That's the one predictable thing throughout all this. And so it's like, how do you make your way through chaos? And so how do you merge technology with the agent experience and the client experience? And so I think we've got a great panel here. And so if you don't mind, that's kind of where I think we'd start. And so I don't know how this works exactly for the people online. I would assume if they've got questions to send them in and they'll be asked. this should be very interactive. So I think this can be a really exciting day, or it can be a very long day, and that's up to everybody here. So I would encourage you all to ask questions from whatever point of view we're at, because it's a very varied group in terms of who the audience is here. And really, so I've had the opportunity to talk to everybody here, and we've got different experiences from the PNC side of things and from the life side, annuity side of things. And so I think it's kind of interesting to see the way things emerge here. And so, data clearly is kind of at the center of what we're doing. And so, if you don't mind, one of the things that, I would tell you is, I think clients like to cross buy, but agents don't like to cross sell. And so, Jeff, if you don't mind, I'd kind of like to talk to you about cross-selling, and then as data emerges, this is kind of a wide topic, but, how do you manage data and the compliance concerns, and then even the regulatory concerns between maybe life and health and annuities?
Yeah, that's a big question. So I think before I answer, it's probably appropriate for me to provide a little bit of perspective on how I approach this market. So I lead our go-to-market strategy for our PNC life and health business at Verisk Marketing Solutions, which was formerly known as Jornaya until December of 2020. So we are a data and technology company that has an eyewitness view of comparison shopping online for major life purchases. So any big ticket item where a consumer is doing research online and then ultimately soliciting quotes and applying and then making a purchase decision, we're there with the consumer as they make their way through that journey. So we're seeing mortgages originate, we're seeing insurance quotes being requested and applications taken. We're seeing folks go back to school, buy cars, any of those big ticket items, right? So what we've seen that I think echoes everything that you just said is, over the course of the last 2.5 years, shopping online has been supercharged in insurance. In life in particular, we're starting to see, as Mike mentioned, we saw this incredible increase. We're talking about, double-digit, triple-digit percentage growth year over year in life insurance and shopping. And if you look at the MIB, they were seeing the same thing play out in application activity. As quickly as we saw that flash happen, we also saw it dissipate. Now we're seeing double-digit percentage decreases in traditional life products. On the PNC side, continuing to see growth year over year. On the health side, continuing to see shopping growth year over year. And I'd say that shopping growth can either mean that more consumers are flooding the market and are interested in taking advantage of their options online because it's easier to do so, or products continue to be as confusing as they've ever been, and consumers are hungry for somebody to make it clear and easy for them to understand and then ultimately purchase in the manner that they would like to purchase in, whether that's online or still offline with an agent. So as I turn to the question that you asked, I think first and foremost, we're seeing more shopping than we ever have. It's important that data is not only leveraged as a tool for agents, brokers to be able to do their jobs better, but that also that data is secured not only with regard to regulatory compliance and those bodies, but how a consumer would want you to handle their data in the first place. So you've got the Telephone Consumer Protection Act. You've got the California Consumer Privacy Act. All of those are good guideposts, but the one that I most often use is, what do I want the companies that I do business with to do with my data? How do I want them to secure it? And obviously that's a sort of broad way to describe it, but welcome the opportunity to get into the details.
Well, maybe then from a consumer standpoint, then Jeff, like technology, how do you leverage the technology and get the advice to the client, the ultimate client? And and Barbara, I'd even throw that out there to you too, about when you're looking at behavior of what they're buying in home insurance, car insurance, their buying patterns? How do you correlate that to other things like Mike was talking about earlier in terms of potentially lifetime income and things like that as somebody's going through retirement to be able to fund those things? So
yeah, I can start. So there's more information available now than ever about who the households and who the individuals are that we want to write. And I would say knowing who you want to write and then better understanding who they are as they enter your marketing funnel is critical. It's frankly table stakes at this point. So having a system that can accept that type of data and make sense of it is important. And then collecting that data is one thing, making sense of it and then deploying it is another. So you had mentioned lifetime, income. You had mentioned things like geo credit score, outstanding mortgage amounts. All of this stuff is widely available. And frankly, shoppers these days are expecting that Amazon type experience. They're expecting us to know who they are prior to us even having a conversation with them. So I would say that job is as important as it's ever been for agents to be able to understand who those consumers are before they even enter the funnel, and then deploying that data across the value chain and throughout that customer lifecycle. I don't know, Barbara, do you have any differing opinions there?
Well, and that's not necessarily a different opinion. I can give a little perspective though on sort of the state of the art, what is and what is not possible in terms of understanding how to refine your offering. So I think as background, I'm more of a P&C person. So if you think about what is the state of the art right now when it comes to being able to target your offering to your particular consumer, and I'd like to suggest that it's not as refined as you hope it is. First of all, the personal auto is probably the area that's most advanced in insurance in terms of digitization. There's more money thrown at it. There's more effort thrown at it than any place else. Yet, how many dollars are spent in mass market advertising? You can answer the question yourself because you can probably name all the characters for all the major commercials for all of the major auto insurance companies, personal auto companies, and you can probably sing half the jingles. And if you're from New Jersey, you can even sing the jingle for the one that says it doesn't have a jingle. So with that in mind, so that's actually so the holy grail is to be able to target to exactly what you want. And where the auto insurance industry would love to go is to be able to do it as well as your credit card company, right? You get that personalized credit card offers just for you. They figured out that it's something that you might say yes to. And that's actually where the auto insurance industry would love to go. And they're still figuring it out, as you can tell. When you stop seeing Flow on TV as often, you'll know they've started to figure it out. So having said that, though, there's still a lot more that you can do than you used to be able to do. But in terms of technology, the only way to really take advantage of that is to go with modern technology. You've got to have cloud, you've got to have low code, no code, you've got to be able to configure and adapt and all those good buzzwords, agile, all this other kind of stuff. If you can't do that, then the best you can do is take information, third-party information, other kinds of information, bring it in on a spreadsheet into your CRM, your Salesforce or whatever, and it will help you. It will be better. But if you really want to start tailoring and refining what it is that you're offering either through your agents or directly to consumer, you do need to go with modern technology.
Brian, I kind of throw that to you then. I made a comment about clients like to cross-buy, but agents don't like to cross-sell. So, how do you use technology maybe into leads, into being able to cross-sell or have cross-sell opportunities? And then what challenges, you have maybe, from a compliance standpoint or regulatory standpoint, in terms of sharing information?
Yeah. Excuse me. So I think it might be helpful to give a little background as well, what we do. So I'm responsible for revenue operations for Surify, as Paul said, and Retiretech, based in San Jose, California. We're getting ready to celebrate our 10-year anniversary. So before we were called an Retiretech, we've been out trying to to help the life and annuity group space or retirement space with digital transformation. So we help them with acquisition, we help them with ongoing engagement, and frankly, we also help them service those clients once they come in. And so cross-sell, so I might take a little different angle. So Surefy, white label solution, don't know it exists. We have a lot of carriers that come to us and they talk about some of these buzzwords and but we kind of have to step back, crawl, walk, run, and see what they can actually do where they are today. I mean, the number of people that don't have email addresses on existing customers is crazy. So, but that doesn't mean don't get started, right? So what we've seen or successes that we've seen with carriers are the ones that pick a piece and go after it. So some of our, I'll give an example of a property and casualty carrier, probably better known for the property and casualty business, but we work with their life team. And they already have a wealth of data that's sitting there. They know who that customer is. And so your point's perfect, where the agent doesn't reach out to them, because a lot of agents we find are very good at selling a certain product, and that's where they focus their business. And we always joke, if we can just say, hey, did you know we sell these other things? The outcomes would be enormous. But so how do we do that for the agent? How do we facilitate that? Or, a growing number of orphans or, reassigned policies. How do we help that agent do it? And so the carriers that we've seen have success is taking that in-house data, using that to then make an offer. So if they're on the website, if they're on a Facebook and they know who they are, and targeting that person with an offer like, hey, here's a $15 a month policy that you qualify for. They ask them 5 simple questions, and then that person's bought and going through, not going through a full application, not sending them something that doesn't make any sense. And so we've seen a lot of success with the people that get out there, because as everybody knows, that first day of trying something, you learn more than 4 years of planning to try something.
Yeah, I couldn't agree more with any of those statements. The difficulty that we see a lot of in terms of activating on like a social media campaign for starters, right, is they can get expensive really quickly, or competing in the paid search arena, or even buying data leads or warm transfer phone calls. The first 30 days always look great. And then, as we all know, then it starts to dip and you don't know why. So again, data like ours, as an example, I promise this won't be a pitch, but data like ours will help you separate the wheat from the chaff. And again, focus in on and spend the exact same amount of money on acquiring the people that are not only good risks, but then also the people that are most likely to respond. So again, an example that resonates is we work with a large P&C carrier that is not known for their life business, but interested in growing it. And we took their in-force file. We listened to our network of 500 million shopping events every month, and then provided a daily feed of shopping activity back to the carrier to distribute to agents. So those agents have a data-driven reason to call their customer, have a benefits review, have a discussion that the agents loved it, because it wasn't just, hey, call your book and thank them for their business and see if you can cross-sell them. They had a reason to call. They had a goal to get towards, and it resulted in, additional policies sold for sure, but it also resulted in a ton of agent satisfaction as a result. So that's an example of using data and technology.
So I'll throw this out there in this environment in particular. So a little bit about us. So I run the annuity and retirement planning division at AmeriLife. We're a distribution company with 5 different verticals. So this is a very timely discussion for us. And so in the type of environment we're in right now, where you have volatile markets, you have a set group of demographics that are looking at retirement, that you're looking at things. How do you get your message out effectively, especially in an environment where you've had a 20% plus market correction and you've got client behavior to deal with in terms of they're unsure what to do, but they're looking for solutions. And as an advisor, to use technology to be able to efficiently get to them and not be blocked by all the different kind of things out there. How do you be effective and yet be efficient in terms of reaching new clients?
I'd say it, sort of similar to what I just mentioned, like you have finite budget to work with, you have finite time to work with. So being really, really choosy about who you're targeting in the first place is where I've most often seen success.
Yeah, I'll go back to one of the comments. So we see a lot of people that have that data, or they know they want to go sell a certain product, but they're getting interest and they're seeing leads coming off the website. So, for example, we had a carrier that got ranked in one of the publications review as a great place to buy life insurance. And so overnight, the number of leads that came in, something like 100,000 that were going there, but their online experience, both for life and annuity, was they had a quote for life, but then it was call a telephone number. And you can imagine these people that were digital coming in, it fell off pretty hard. And these are just free leads that are coming in. And so relying on the agent, sending them to the agent or the call center, it's important. And there's people that want to buy that way. But we find that the biggest success is when carriers, go a step further and take the action for the agent. And so actually send the message with that agent's picture and name on it for them. Now, of course, there is the who owns the customer, and our founder, Dustin, kind of calls it commission conflict versus channel conflict when you start interacting. But we have that P&C carrier I was talking about, just to give you some statistics. So when they were making a P&C offer, they also now put a life offer at the point of sale. And they were seeing anywhere from a 4 to 7% placement rate on all the home policies, car policies that they're writing. They were well under 0.5% before that. So just enormous numbers for them, taking that extra step and actually sending the first communication for them.
Well, Barbara and I had this discussion a little bit earlier. We were talking about the P&C space as far as technology goes has been so far ahead of our industry. I think that's not any surprise to anybody. And so recognizing the buying behaviors of people in the P&C space, how do you integrate those two spaces in terms of data and information as it relates to buying behavior? And then the second part of that is the security that's around that, both from a risk standpoint, but also a regulatory standpoint to protect information.
Yeah. So when you start the buyer experience, I'll just do some background illustrations. You see a lot of insurtechs coming to market as MGAs, and they do so because they have a great piece of technology. They understand how to interact with that customer. They're probably more tech forward rather than insurance forward. They can do A/B testing. They can change all the time, figure out where they're losing people, in the quote process and refine that, right? And so that is one of the areas that you're seeing where there's an awful lot of while you're seeing the insurtechs is starting to make headway is in doing a much better front end than the insurance carrier, but they're MGAs, which means that they, at some point, someone's got to provide the policy. And you have, so now the latest trend that we're seeing is that some of these companies that started off as MGAs are starting to build full stack carriers. And you'd be like, why would you do that? Why would you do that? Why would you take on that surplus load? Why would you take on that regulatory load? Why would you take on all of that expense that isn't going to, once you have a carrier, it just looks different. You had this high flying tech company, and now you have this huge asset pool that you've got to manage completely differently. And the reason they do it is because the customer can feel the difference, right? So to the point you were just making, where you start off with a very high-tech experience and then you end up having to make a phone call. It's, that's kind of like the MGA legacy carrier combo, right? So you've got this really great front end where you've set up an expectation that doing business with this company is going to be really special. And then you have a legacy claim system and a legacy back end and all this other kind of stuff, and you can't deliver on the promise. So that is kind of where you see these things going, and I think that's where the opportunity is in the life space. However, you were asking about security, and so one of the things that happens though is you end up with a lot of challenges, because if you're a legacy carrier, you can see the opportunity for you to put this slick front end out there, right? But now, how does the way they do business mesh with the way you're doing business? I was listening to one guy talking. He was talking about how typically, in a lot of cases, a legacy carrier, their cybersecurity will kind of be, they built the data sits there in the pool and they build the moat around it and the wall, trying to keep everything out. And now you've got to let the InsurTech in to do the thing that they do so that you can interact together. And now, what does that do to all of your security? It puts a whole different flavor on the way you're doing security. We as a company, we manage many large databases, some of which are contributory, and we use FCRA databases and things of that sort. And, we have even gotten to the point where we're like, we can't just do business with every startup InsurTech that calls us up. You have to have certain standards before you can even really talk to us, because our data is at risk and our relationships with the people from whom we get the data is at risk. So it just puts a whole level of security concern on it that wasn't there. And the problem with legacy also is that, so you've built it. Well, how costly is it going to be to rebuild it? So you kind of have to make it work the way it is.
I might add, I agree with a lot of what you said. We sit in a lot of executive boardrooms, or we go through RFPs with vendors, and they're focused on the front end. We're a digital front end company, so we love that. But you take simple things like servicing, beneficiary change, and you're like, I saw this cool experience. I had this no-code platform come in, and I can build anything, and it's slick, it looks great, and this is what people expect. You're absolutely right. What we found is that anybody can come in and show you a really pretty website and a couple things, but the carriers have that legacy issue, and 10, 20, 30 different backend systems that range from green screen to maybe something with an API if it's newer. And we've seen carriers attack it a couple of different ways, where we had one of our carriers sell their entire book of business and go greenfield, all new vendors. We've had new products are going to be on this new digital stack, and we'll figure out what we're going to do back here. And then we've had hey, I'll talk to me in 10 years when I'm done converting everything. And so don't know if we agree with all of those, but what we've really seen is that the InsurTechs that you work with, or the partners that you work with, InsurTechs become such a broad topic. They have to understand your business. They have to, that's the hard work. That's what takes so long. It's getting through regulatory compliance teams. That we had a 12-month contracting, and we work with companies like Nationwide, Allstate, Amica, Bright House, massive carriers like yourself, and still it takes 12 months to get through because everybody's scared of being the next front page news. What do we have? We had our brand, we have our price, and we have the product. There's not much that differentiates us. Having bad press can hurt, and so getting through is hard. But then what's really hard is you hear someone say, "Oh, this is really cool." It's wait a second, but how are you going to connect? How are you going to make that actually happen? And it's we're in the gold rush for going and digitizing, but and a lot of people have taken action and made that first step, which is important. But what we're seeing is over the past 2 to 3 years, a lot of people tied up in projects that have this awesome end result from a digital front end, but they're trying to figure out how to make that happen. And so, I really encourage people to step back and say, don't worry, the shiny part is important. It's got to be a good experience, but that's a checkbox. Make sure that you can really have asked the questions about how they're going to solve the problems underneath.
So another P&C analogy. One of the ways you see InsurTech really thrive in the P&C side of the house is where they have figured out how to expand the market. So a couple of different categories: cyber, small business, or micro business even. Those are areas where InsurTechs have sort of focused on and are doing a very good job in creating. And what they're doing is actually expanding the market. They're selling insurance to people who didn't used to buy it. So if you were, say you were you're a spouse of someone who is working full time, you want to start your own business at home, historically you didn't buy insurance for that, but now you might because it's a lot easier to do and it's a lot more tailored to what you want to do. But one of the reasons why that is so easy to do is because you're not bumping up against legacy systems. So if you're an insurtech, you've got this much runway. What have you got? 18 months, right? So, and if it takes a year to make a decision, that's 2/3 of your recent funding round. So if you're an insurtech, it's a lot easier to stand something up and get that partnership if they don't have to, if the legacy carrier doesn't have to let you into their legacy system in order to be able to do that. So, so the opportunity, I think, in the life and health space has to do with maybe smaller premium items or selling to markets that were historically underserved, things of that sort, things where you can experiment in a greenfield space, build a fully digital throughput experience, keep your costs down appropriate to the size of the premium and the offering, and learn how to do it. And I think that's a great opportunity.
Well, one of the things, Mike, you had short comments, but you really had a lot of really good things in there. And, one of the things that I really took away from what you were talking about was the need for lifetime income and how a cash flow type approach is beneficial. But yet, you've got the investment world, you've got the insurance world that have kind of been I don't want to say at odds, but they've had different viewpoints on the way to accomplish things. And then there's been kind of a convergence. So as that's happening, and you mentioned robo-advisors too, how I'm curious how this group, and maybe, throw it open out here, is when you see technology versus human interface react with the client, because we want to be able to deliver products however a client wants to consume them, whether it's online, whether it's personal, however it might be. But I think oftentimes it's going to be a combination of those things. And so, I've done things just for fun to where, you buy a life insurance. I won't mention any names, but, from an online insurance company. And where it got really interesting was when you pushed it to make sure you got human interface, where it got clunky in the process. And it's very clunky in the process, and so I'm curious from everybody what you think on that, is how do you make a kind of a seamless, or hopefully seamless, part between consuming and the buying experience where you have to have both technology and advice?
Yeah, I'll try to take so meeting the customer where they are, right? And who is the customer? Like, obviously the statement used to be, well, my customer is the agent and the broker, the FR. That's changed. You have to have that direct relationship with the end consumer. They're demanding it. And then from an experience standpoint, agents, they used to maybe let us get away with a little bit more. And so they were okay with a clunky process because they were getting paid at the end of it. Well, now they don't have to be, and their expectations from a digital experience are maybe even higher sometimes, because they're like, I'm not going to put that in front of this customer, especially when you're asking them to cross-sell or sell something that may be something new that they're looking at. Like, so they haven't traditionally been selling annuities for the market hasn't been that great in it, right? And so now you're saying, hey, I want you to do this. And traditionally, most of the carriers that we work with, their annuities also from a digital experience has taken the back seat. That's changed rapidly in the last 4 months from the calls and interactions, the projects that we're working on. But yeah, that expectation has completely changed. You've got to, it's real easy for the insurtechs to do that because they're starting from scratch, that greenfield experience. But when you're like, we describe it as a highway, so our tech stack allows that carrier to do everything to get on and off of that same highway, and not to have, I have my direct-to-consumer experience, or I have my agent experience, or I have my bank experiences. How do you merge those? Because people are going to want to start, a lot of people by themselves, but we still see they want to interact. They want to make sure they're making that right decision. And so partners like Glia that we work with, which allows for face-to-face or instant calls, there's lots of those out there, but how do you man them? When do you send that to a person? How do you provide videos, FAQs? How do you help educate people as much as they can so that you're only getting to the key conversations? And then when you're having that conversation, making sure it's not you've been here 30 minutes and then I'm starting over saying, okay, what are you calling in for? It's like, what do you mean? What am I calling in for? So.
Yeah, I was laughing as you were telling your story about pushing and trying to get to a human, because I immediately brought to mind a visit that I made to an Retiretech where they're now a unicorn, but at the time they were not. And so the person I was visiting pointed out this table over here was like 10 people sitting around a table, probably max age 26. And those were the licensed agents. So that when somebody had a question, that's where they ended up with one of these. And anybody who's ever been in insurance front end, if you've been an agent or if you've been an underwriter where you've got to talk to that customer, it's like, when I was a baby broker, they wouldn't let me do anything by myself when I was 26. They didn't trust me with the clients, right? And that's who's handling your experience. So I think the thing to think about, the problem that we all have to work through in our industry is that in a lot of ways, our legacy business is a utility. And it is so for many, many reasons, right? We must protect the assets. We must be there to pay the promise that we committed to the day we committed to that promise. And we have a well-organized regulatory system that's designed to help us get to that point and the financial crisis, if everybody remembers, the financial crisis proved that we know what we're doing in that regard. So there's a lot of good reasons why the utility looks like the way it does. And then you're trying to put a slick front end on top of that, where the people who have been manning the utility all these years don't have that skill set. So this is a completely different skill set. We're talking about a high growth, fancy tech business that we want agile and change and A/B testing, all these buzzwords as I can throw out, but the point is that the people who know how to do this really well don't do this, and the people who know how to do this don't do that. And as an industry, that is the problem we need to solve. How do you bring those two things together in such a way that you can deliver the entire experience that the customer's looking for? And I think we're still working on that.
Yeah. So a couple key themes that I'm hearing all of us sort of circle back to. The first is break down silos between your product offerings. The second is break down silos between your marketing and sales channels. So what we've seen, Brian, you hit the nail on the head, is people love to start online. Insurance is still complex enough where I personally still talk to an agent before I make any sort of purchase decision. Maybe for simplified issue or lower face amounts, things like that, I would feel a little bit more comfortable making a purchase online. But at the end of the day, when I was making a critical decision for my family, I still wanted to talk to an agent before I made that decision. Same goes with a number of different insurance offerings, not just life and annuities. So I'd say break down silos in your infrastructure, break down silos and create an omni-channel experience, whether that person is talking online, carry that information over to the agent. When I call in on the phone number that was given to me on the website, when I abandoned cart and decided I needed some assistance. American Airlines, my cable provider, they all recognize me whenever I call in to their support centers. Let's start simple, and then we can build off of that together.
Actually, I was going to say my own insurer actually does do that. So if I start online and then I abandon it and call, they actually say, "So I see you were just on the website. How can I help you?" Which is, it's good. It's not creepy.
Well, and I think that's what we're dancing around too, right? Like where that line resides of like personalization, but not the creepy factor, right? Knowing where this person wants you to pick up with them without making them feel uncomfortable with it.
Well, I think, that's an interesting, because there's where an opportunity is how do you make a seamless experience where technology and human interaction are seamless, where you're going back and forth, and technology and personal advice become conversational versus I see you were looking at this.
They're tools, right? They are never. That's the other thing that a key theme, right? There's a misalignment between the agent base and the carrier. Align those incentives. Make the agent feel like big internet is not going, or robo brokers are not going to take their jobs, but rather make them help them do their jobs better. That's my personal belief, and it's maybe a little bit controversial coming from a data and tech guy, but that's what I believe. I
think it's the right opinion. I think if you get most of the tech people in a room that have had any experience and seen stuff would agree with you. You've got to meet them there. The commission conflict conversation, pay them, like we have carriers like, I sell through agents. I don't. It's like, okay, so you're saying anybody that starts online you don't care about. Like why would you not facilitate those? And yeah, a small percentage may make it all the way through, and that's what they want. So, and maybe you don't want that. Maybe you want them to talk to an agent. That's fine. At least let them start, and then offer them a good experience.
I know we're right up against lunch here, and so I want to thank everybody. And I know everybody's going to be around for the day, and you've got some real expertise that I'm surrounded by up here, and I would encourage you to talk to these folks, because I think there's some really great conversations to be to go around this whole subject as it relates to these things. So just with that, I'd like to thank my fellow panelists and thank everybody for putting up with us at the start of the day. So thank you all.
Thanks, everybody.
Thanks for listening. If you enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more great information about this company and other great startups at imagine.nfg.com.